Well, taking a look at cryptocurrencies right now, Litecoin just a little bit higher, but we're looking at Bitcoin, Ethereum, and of course you can see the USD per the XRP, excuse me, the XRP, that's flat. But looking at Bitcoin right now, 19,793, so we're still below that 20,000 mark. Bank of America says that crypto investors have started to pull back on buying digital assets due to a more hawkish Fed. The bank warned that crypto investors haven't fully priced in the possibility of a recession as more interest rate hikes are on the table at this month's Fed meeting and maybe more. Joining me now on set, first on Fox Business, is the Ava Labs president and Avalanche blockchain head, John Wu. John, it's great to have you here.
Cheryl, nice to be here.
General comment, what we're seeing with Bitcoin still below that 20,000 mark. We've kind of been there for a while. I think the question is, have we kind of bottomed out there?
Well, Bitcoin's holding in at 20,000, but in general, the space, the big ones and the avalanches, the Ethereums and the Bitcoins, they're trading at a 0.8 correlation to the NASDAQ. And the volatility is the same as a big high growth tech company like Snowflake. So if you're going to take liquidity out of the system and Fed's increasing rates and QT is increasing, the whole space is going to be affected by that.
One of the things that we've always needed to kind of see with cryptocurrency in general, you've got to have the banks behind you, financial institutions. Even Jamie Dimon seems to be maybe coming around a little bit. And then you also need the government. You need the SEC on your side. Do you think that we're getting closer and closer to more general acceptance?
So on the enterprises, for sure. Look at BlackRock. BlackRock and Larry Fink was a no-coiner, as they call them. And then literally about 2 or 3 weeks ago, they make this huge announcement that they're partnering with Coinbase. And they're going to support Coinbase. Coinbase will support Bitcoin and possibly other currencies for Aladdin, one of the biggest products, risk management products at BlackRock. That's a huge turn. I mean, we're talking about $10 trillion of assets there. You've got other enterprises also getting into the blockchain space. So to tie the first question with this, I think if you just look at prices, it doesn't tell the real story of what's happening. Underneath, adoption is happening, and real world assets and enterprises are either using the blockchain or coming to the blockchain.
Well, the biggest concern obviously is theft, cyber theft. I mean, are we better now on this? I know that nothing is ever secure. I mean, credit cards still get stolen and hacked out every day. But do you think that we're one step closer to having more secure cryptocurrency?
That's such a great question, because the currencies and the chains themselves have actually been very secure. All the theft or rug pulls or issues that related have been at human touch points or at the edge where the currency gets transferred out into fiat. So it's actually not to do with the chain itself. It has to be with the edge points.
So you've got the House Oversight Committee. They're actually pushing forward on this same issue, and they're calling on. They've got Coinbase, FTX, Binance, Kraken, KuCoin. They want more information about investor protection, and I think that that's fair. And I think for once the government might be actually looking out for our interests here. But how are they going to bolster their defenses, do you think, not just to assure investors, but also to deal with regulators and with Congress, because that can be a little bit of a unknown, if you will. You don't know what these guys or gals are going to go after.
Yeah. Whether it be Coinbase or FTX, I've talked to people at both places. They actually want help in terms of protection for the user. That's for sure. On the regulatory front, I think what everyone is hopeful is that the different bodies in the U.S. can work together, whether it's the SEC or the CFTC, so they can come up with a framework and work together. Otherwise, you're just using blunt instruments to regulate in space where certain currencies are probably more currencies and certain tokens are actually more securities. And others are just utility, like loyalty points. So you really need them all to work together.
The other thing, this has been going on for a long time, but the rub against cryptos obviously was environmental destruction, the manufacturing of it. But I think that's getting better.
Well,
they're looking for better ways to actually process.
That leads into Ethereum's merge that's going to happen very shortly. The merge is actually going from what they call proof of work to proof of stake. And when you go to proof of stake, effectively what you're doing is you're making it far more energy efficient. So therefore, you don't have some of the issues. The last coin will be Bitcoin, which will still be proof of work, but that's only going to be 40% now of the market cap.
All right. Well, John Wu, thank you for coming in. It's something, I know it's a space we all watch and want to get our toes into. Some of our viewers have both feet and both hands in the market, so we'll continue to follow it. John, thank you very much. It's good to see you.